Our first ask and answer session with our employer. We're so pleased that that people could join us this morning for this session. We're very happy that you've taken the time out of your busy day to join us, and we thank you for giving us the opportunity to connect with you. The Ask and Answered series is intended to create meaningful engagement and opportunity between you, our participating employers, and Provident 10 as the plan administrator for the Public Service Pension Plan. As I said, we're very excited today to host all of you together, and we anticipate that these sessions will foster great relationships with all of our employers. Today's session is, I would think, an historic one, not only because Provident 10's it's Provident 10's first Ask and Answered session, but because this is the first time that representatives from all 40 participating employers in the Public Service Pension Plan have been provided the opportunity to come together as one with the pension administrator. And so we're certainly looking forward to this event, and we certainly want to take the opportunity to encourage you to participate as much as possible in this particular event as well. The goal of these sessions is to make, excuse me, the goal of these sessions is not to make you feel as though you need to be a plan expert, because our team at Provident 10 will always be here to help you. Instead, it is to provide you with insights into the terms and conditions of the Public Service Pension Plan, as well as provide you with information and resources covering many of the pension administration processes that will assist you when you're answering questions that you may have or your employees may have. Before I begin, however, the presentations today, I would like to introduce you to this virtual platform that we're using. It's called GoToWebinar. And on your screen to the right-hand side, you should see your control panel. And I just want to walk you through the control panel. For many people, it may be a new adventure in technology. It was for me when I first started using GoToWebinar, but it's not as complex, I suppose, as you may think it is when it comes to using it. On the control panel, right at the top, you will see an orange box with an arrow. That orange box will help you open and close your control panel. So if you click on the box, everything should fold over to the right. And to open it, just simply click on it again, and all your icons will appear. Directly below the arrow is the microphone symbol, and notice that your microphone should be red, which means it's muted. We're going to keep all microphones muted during the presentation, but at the end of each presentation, we'll give you an opportunity if you want to ask a question online. By all means, come online and ask your question. If you need some clarification on an issue, don't hesitate at all to ask. Below that is what's called the screen preference, and right now you should be seeing a features page that I'm explaining, and all the presentations that our presenters are going to be providing to you today should appear on your screen. Directly below that is called a raise your hand feature, and again, we're going to keep the raise your hand feature. We're not going to be using the raise your hand feature today. However, if you want to ask a question, or if something pops in your mind during the presentation today that you might say, well, gee, if I wait, I might forget it, then in the control panel right at the bottom, you will see an icon for questions. So you can simply type in your question there. It's similar to if you've used Skype or Teams or any of those types of media. You can type in your question there, and our moderator for today will be monitoring all the questions. And then at the end of each session, if there's questions that are unanswered, then she will come online and simply ask the question that somebody out there has asked, and one of our presenters will certainly answer the question for you. Also, directly above the question section of the control panel is something called the handout. We use that if we have a handout for a particular session. The only thing today is that where this is a new process to us, what we have planned to do is that once the session is over, we're going to create a summary sheet or a tip sheet for the actual session, and we will post it on our website under employers, under the Ask and Answered icon. As well, we'll notify you of it and may even send everybody the handout or the tip sheet when we do that. So for today, agenda, we are going to look at a couple of topics, and some of these topics were came out of the survey that we did with our employers back in December with your input. Going to give you a brief introduction of who Provident10 is. We're going to look at who we are, the core pillars of the corporation, what we work towards each and every day, give you a few facts about the membership as they currently are, and then we're going to have two of the presentations. The first two presentations, the first two presentations are topics that you as employers requested. These were two of the areas that received most strikes, I would say, during our survey, or most interest during our survey. So we felt we'd start off with those. And I'm going to introduce Amanda Alexander later on as well. We're also going to cover with you today the pension adjustment process. And as you were made aware back in December, Provident10 this year will be reaching out to the employers with a template to collect from the employer the actual pension adjustments that were sent into Revenue Canada. And the reason being is that we need to know what was reported to Revenue Canada when we do certain internal processes with respect to pension administration processes. If we're transferring service out, and Lisa will get into the details of the pension adjustments and why they're necessary for us to have. And then, as I said, at the end of each session, we will certainly have a question opportunity, as well as at the end, if you have any questions regarding that. If you haven't already met me or seen my face on any of the information that we've been using, my name is Perry Downey. I'm Director of Member Services with Provident10. My primary role and responsibility is to assist in the development and delivery of educational information regarding the terms and conditions of the pension plan for plan members, as well as participating employers. And we hope that the information that we develop and deliver to you will assist you in better understanding the terms and conditions of the plan, as well as help the plan members make more informed decisions regarding their pensions. This is part of our what we call our life cycle education program. We have started a major life cycle education program with our employees, or with our plan members, your employees, when we introduced last year the Retirement Ready series, the pre-retirement seminars that we're doing now virtually. They have been an overwhelming successful in every stretch of the imagination. The interest, the comments that are coming back, very, very positive. Just to let you know as well, we're going to be expanding upon the employee or the plan member life cycle process. We're in the process right now of developing 2 additional webinars. One will be for our new plan members, somebody who's entering the plan for the first time. We're going to have about a 2-hour webinar for individuals to let them know what it is they need to know about a pension plan as they are entering the plan. And we're also in the process of developing a second webinar for our what we call our mid-career plan members. So it will cover topics that people need to know or should know partway through their career in making informed decisions about certain things. We find, and a lot of the comments that come back through the evaluations that we're doing on our Retirement Ready series is that, you know, why didn't somebody tell me this 20, 25 years ago? I could have made a more informed decision back then and probably would have been in a better situation today when it comes to the benefit of my pension. So these 2 new webinars, we're hoping to have the new plan member one ready before the end of June. And the mid-career one at the end of, sometime during the fall. So before I begin, or before we get into the presentations itself, I just want to give you a little idea or some concept about Provident10. And back last year, we developed a very short video on who Provident10 really is, and I'm going to share that video with you now. Just give me a second, I get it loaded up here. And afterward, I'll come back and comment on the video itself. So here's a very short video on who Provident10 is. So that's a short video that we did, as I said, last year regarding Provident 10. I use it when I do the Retirement Ready series as well, and at least it gives a little overview of who Provident 10 really is. It talks about the experience on our staff. We have probably one of the most experienced staff with respect to pensions administration there is in the province. As a matter of fact, most of our pension administration team worked with the previous plan administrator when the plan administrator was provincial government. So we have a lot of experienced people working with us today. At Provident 10, we have 5 pillars that we have that we guide our work each and every day based on, and these are, as I would call, our guiding principles. High standards is a bar that we set for ourselves because we know that our plan members rely upon us for peace of mind, ensuring that what we're doing is correct, that we're following the terms and conditions of the Public Service Pension Plan text. I've often said to many plan members who sometimes may call a little upset or a little concerned about certain processes that's involved in the pension administration. And, you know, as a plan administrator, the Public Service Pension Plan text is the guiding principles and the terms and conditions that's been provided to us to follow by the parties to the pension plan, which would be the government, the employees, the government, the employers, and the 5 unions that represent the membership. So, you know, when it comes to Provident 10 staff, I've often said many times, please don't shoot the messenger. We have to follow the guidelines that have been presented to us. So, you know, creating that high standard for ourselves and following those guidelines for each plan member and for the employer, very, very important to us. Another concept or another pillar that we have is our teamwork. Our success comes from our team approach. We're always here to help and support each other because we'll get better outcomes for our membership and our employers when we do. So, you know, at any time, please don't hesitate to involve us in any of the questions, concerns, issues, ideas, suggestions that you might have regarding the pension plan and the administration of the plan. We certainly have a vision for the plan. We're always thinking about tomorrow. Not only do we focus on success today, we look for smarter, better ways to succeed tomorrow. You know, and we're always focused on improving. So it's very important for us that if we want to maintain and sustain a pension plan for the 55,000 plus members, it's going to be very important that we have a strong vision of where we're going with respect to the plan itself. Very focused on customer service. Our pension plan, as I said, is at 55,000 plus members and 40 participating employers. So being customer focused is the industry we're in. So we're very responsive and responsible to all our members as well as all our stakeholders. So, you know, ensuring that we obtain your trust in doing what's needed and what's important for each plan member is so important to us. And last but not least is probably one of the most important by way of whether or not we're doing a good job with the pensions administration and the investments of the plan is the accountability. So not only do we measure ourselves in what we're doing, we'll learn a lot about ourselves by the feedback that we get from our membership, as well as the service that we're providing to our membership and our employers. So, you know, being accountable to 55,000 plus people, as well as 40 employers, is very important. And as you probably have heard the saying before, it certainly holds our feet to the fire when it comes to the administration and ensuring the sustainability of the plan itself. Here's the current membership in the plan, broken down into three groups. We have almost 28,000 active members in the plan today. So these are people who are working each and every day, paying contributions to the plan and accruing service and benefits within the plan itself. We have around a little over 22,000 pensioners, and that would also include our survivors of pensioners, so people who are now collecting a survivor pension because a plan member has passed away. But we're paying out benefits to a little over 22,000 pensioners or survivors of pensioners today. We also have almost 7,000 what we refer to as inactive members. An inactive member is somebody who participated in the plan and is no longer accruing service through an employer. A lot of those members may be what we would call deferred pensioners, people who have worked a minimum at least 5 years of service and accrued 5 years of service in the plan and have left their employment, left their pension benefits in place to receive a benefit later on in life. A lot of those people will become a deferred pensioner, for example, at the age of 60, because they had at least 5 years prior to 2010 when they left under the old plan, or 65 when they have 5 years, and now under the new plan would retire because they had 10 years of service in the plan. So that's the breakdown of our membership today. Just some more little stats on the plan itself to give you an overview of the plan. The breakdown in the gender of active, the gender profile by active membership, about 68% female, 32% male. This is the group here that everybody strives to be a member of. We have 4 members today over the age of 100, not working, but retired, receiving a pension benefit. For the most part, each one of those retired probably at age 55. So they've been drawing a pension for at least 45 years, and many of them work for 30 years. So it's becoming the norm in many pension plans that members are on pension longer than what they actually worked. And like I said, everybody strives to become a member of this particular club right here. A few years ago, I think about 3 years ago, we had 15 members over the age of 100 at that point in time. You saw earlier this particular number. We do have 40 participating employers in the plan. This morning, we have, I think, all 40 employers represented. We have 57 people online with us this morning, so it's great to see so many people. Last year, in 2020, there were 825 new pensioners, people who accrued service and age to qualify for a pension. The average pensionable earnings on which a pension is based today is approximately $60,538. So that means that of all the 825 pensions that were calculated last year, the average salary on which pensions were calculated was around a little over $60,000. The average age of the active membership is around 45. The average age of service at retirement is around 25. So you have people who are retiring at age 60, obviously with less than 30 years. We have a number of people retiring at age 58 with 30 years of service. But overall, the average is around 25. The average age at retirement is 60. The average age of our pensioners is around 69. And the average annual lifetime pension, so a lifetime pension is the value of a person's pension from age 65 onward, is after the bridge benefit has been removed from the pension benefit. So on a lifetime pension, on average, people are receiving almost $23,000 a year on a pension from age 65 onward. Last year, it's great to see, we had almost 1,900 new plan members come into the plan. So it's great to have a plan where you'll have 825 people retiring, but more than double that coming in as new plan members. So that's a good opportunity or a good indication of a healthy plan when it comes to a membership basis. Hopefully we can maintain that trend throughout the coming years. If we do, for certain that the sustainability of the plan should be almost guaranteed. There's the breakdown, or here's the breakdown of the ages of our membership today. So you can see based on the various groupings of age where the majority of people are. So the majority of people in our plan is between 45 and 54, 35%, and the next larger group is 35 to 44 years old. So that's just a little recap of who Provident 10 is and the status of the plan. So now I want to introduce you to a couple of individuals who will be what we would classify as our experts on staff. Because of the topics that you have selected, we have asked 2 of our pension plan staff or pension administration staff to participate in this particular presentation today. We also have our member services administrator joining us today, Natasha Keats. Natasha is one of our recently new hires to the corporation, but they come from a background of considerable experience in providing services to large groups of employers. So she has certainly fulfilled her role quite well in the last month and a half that she's been with us. She's moderating the session today. So any question that you type in during the session, she will be the one moderating the questions and will come online at the end if the question is not answered. The first person I want and get Amanda to turn on her camera so you can see who Amanda is. Amanda Alexander is Amanda Alexander is one of our pension analysts in our pensions administration team, and she is responsible for two of the presentations that we'll be seeing today. But Amanda's background, Amanda has a strong background with pensions administration. She was an operations analyst for a number of years, and recently moved up into the pensions analyst role. So the op analyst and the pension analyst have two totally different functions within the organization. So Amanda is one of the individuals who would be responsible for processing pension applications, processing termination forms. But given her background with working as an operations analyst, she would have a strong background in processing purchases of service requests and those types of processes. So Amanda will be doing two of our presentations today. The other lady that's joining us today has been with the Pension Corporation since its inception, but she has a considerable years of experience working with the plan administrator. So I'll have Lisa. Lisa Blunden is now what called our pension plan technical expert. And she is responsible for ensuring that the terms and conditions of the pension plan with respect to the plan text are met, as well as any of the interpretations of the terms and conditions are followed as they were intended. Lisa has, as I said, been the plan expert for some time, but giving her background and experience with pensions comes from a strong background of interpretation and past practice. So I certainly want to welcome those three individuals to the session today. Also, I want to just reference, we do have another person joining us today online for what I will call this historic session, is Leona Barrington. Leona recently joined our team as the Director of Stakeholder Relations. And so Leona is responsible for overseeing all the communication that occur within Provident10 with all our stakeholders involved in the pension plan, including our employers, our plan members, our pensioners, the board of directors, any of our consultants and other service providers that are involved in the administration of the plan, as well as in the investments of the pension fund. So I want to welcome Leona to our session as well today. So we're hoping that that this new initiative of Ask and Answered will certainly help in the consultation and collaboration between our participating employers and Provident10. And like the first step in a lifelong marriage relationship, engagement is the first step forward. So Provident10, at Provident10, we see engagement as our first step in establishing and maintaining a lifelong relationship with our participating employers as it relates to the pension plan. So let's move into the first presentation. The first presentation we're going to be covering today is the purchase of service requests. And again, the two sessions that Amanda is doing, these will be the topics that you as employers requested that you would like to see covered. So I'm going to switch Amanda over now to be the presenter. And you should shortly see Amanda's slides come up and she will take you through the rest. So Amanda.
Okay, let's see. Can anyone see anything right now? Can you guys see my screen?
Hi, Amanda. We can see it, but it's not in the presentation mode. Okay,
there we go. All right, and before I begin, I would just like to say that I did get a pandemic puppy. So if anyone hears whimpering during my presentation, it is probably not me, but this is my first presentation that I've given, so you can't be sure. So I'm doing the purchase of service asked and answered session. I'm going to do an overview of what our current process is and then touch on the different types of purchases, as well as what we require from the employer to be able to complete the contracts. Let's see. So the plan member contacts the employer to request the purchase time. The exception to this is the additional voluntary contributions, because those can be submitted directly to Provident 10 as we are able to confirm all information through our system. The employer submits the purchase of service request to Provident 10 with the online form. It is helpful for the employer to submit email addresses as we use DocuSign. It's an online platform that is user-friendly, gives the plan member the ability to sign on their smartphone or tablet, and it is encrypted and secure. Then a pension operations analyst prepares a purchase of service contract and forwards directly to the plan member. We have a 90-day service standard to get the contract sent out from the time the request is received in our office. So once the contract goes out, there's a 45-day deadline to return the signed contract and a 90-day deadline to provide payment or initiate payroll deductions. Once the plan member has made payment, if an employer match is required, we do send a convenience copy of the signed contract to the employer. We do not send copies of contracts to the employer in other circumstances. That is the responsibility of the plan member. The service is not credited until payment is made in full. If the plan member is making payroll deductions, this could be a year or more until it is paid off. The service will be reflected on the benefit statement for the year the full payment was received. It's important to note that for all purchase of service requests, the plan member must be an active member in the PSPP at the time of the request. The plan member is under no obligation to purchase the service, but the cost could go up significantly if they choose to request it again in the future. So the first type of purchase we're going to go over is the temporary full-time contract service. Member must be enrolled in the PSPP once their temporary full-time employment extends into the 4th consecutive month or as soon as the determination is made by the employer that the member's temporary full-time employment will extend into the 4th calendar month. If the request is received at Provident 10 within 90 days of entry into the PSPP, the cost to purchase previous temporary full-time service is calculated at the preferred rate and it's matched by the employer. If the request is received at Provident 10 beyond 90 days of entry into the PSPP, the cost to purchase previous temporary full-time service is calculated at full actuarial, and there's no cost to the employer. The GMPP funds paid into the GMPP during the temporary full-time service can be used to offset the cost of the purchase. So for leave without pay, temporary employees or part-time employees due to medical ease back, we need to receive the purchase request form within 90 days of the plan member's return or enrollment in the PSPP. The calculation is based on the annual salary prior to leave or ease back, or the actual salary earned while temporary full-time for less than 4 consecutive calendar months. The deemed or actual earnings for these purchases can be used in the 5 or 6 year average for pension purposes. For leave without pay and medical ease back purchases, the employer who granted the leave or ease back is responsible for the required matching contributions. It is very important that we receive the request as soon as possible. Not only could it cause a member to fall outside the 90-day preferred cost calculation, but actuarial purchases can go up in cost if there are employer delays in submitting. We do suggest that the employer advise a member in writing before and after their leave that they can purchase their service at preferred cost if the application is received within 90 days of return from leave, or in the case of a temporary employee entering the plan, 90 days from the date of PSPP membership. So the information required from the employer to process these purchases are the start and end date of the period to be purchased. Please send in the first and last day of leave or medical ease back. Do not send in the last day worked, first day back active. We also require the annual salary prior to leave, or for temporary full-time service, the actual earned salary and GMPP contributions. If the plan member had seasonal breaks, they are only allowed to purchase the time that they would have been active in the PSPP. For medical easeback, we use the GMPP contributions to offset the cost of the purchase. We do not need to know the dates that the plan member was in the GMPP, just the amounts of contributions paid. The GMPP contributions are not requested until after the plan member portion has been paid. At certain times, if there are not enough funds in the GMPP, we will have to go back to the plan member and employer for the difference. So next we have actuarial and half actuarial purchases. So this includes previously refunded employee contributions, contractual leave, leave without pay when the request is received outside of 90 days, a period of temporary employment when the request is received outside of 90 days, prior service for which the plan member withdrew their commuted value or employee contributions from the PSVP. This has no employer match, and it is based on the plan member's current annual salary as of the date we received the request at Provident 10. So this service will go into the pension calculation, but not the related earnings, meaning the earnings used to calculate the purchase are not used in the highest average earnings calculation. If the plan member took a refund to an RSP, they should use those funds to pay for the purchase. If a plan member took a CV, commuted value refund, the cost is at full actuarial. If they only took their contributions plus interest, it's a half actuarial cost. For actuarial costing, we look at such things as the age at the date of application, the current salary at the date of application, the amount of service already credited under the plan, the earliest unreduced retirement date, and whether the additional service purchased will enable the member to retire earlier than they would have without the purchase. So the information required from the employer is the annual salary at the date of the request, the start and end date of leave periods to be purchased. Multiple periods can be requested at once as it's all done at the same cost. And if there are GMPP contributions that need to be used to offset the cost of purchases from medical easeback or temporary full-time contract service. So currently, the only purchase that plan members can request directly from Provident 10 are the additional voluntary contributions, which we usually refer to as the AVCs. This is only for plan members who had reduced accrual rates during the period between April 1993 to March 1996. This did not affect all employers, and we usually can process this on our own, but we may need to confirm with employers the plan member's annual salary at the date of the request. So it is calculated at the full actuarial cost to reinstate the applicable percentage of the accrual rate that is missing for each portion of the year that the plan member worked during the reduced accrual years. So now we have required contributions, and these are cases where the plan member should have been entered into the PSPP, but was not. We may need additional supporting documentation. The cost is based on what the plan member would have paid had they been a member of the PSPP during that period in question. If the plan member does not go ahead with the contract and requests to purchase the service at a later date, the cost will be at full actuarial. The employer match is required if purchased at preferred cost, but there's no match required if it's purchased at the actuarial cost. If there's a break in service between when it occurred and when the request comes in, it is not considered to be required and it would be available for purchase at full actuarial cost. So an example of required contributions would be if the plan member was not put into the PSPP when they became a full-time employee. The employer realizes the error the next year and can correct current year, but prior year will need to be done through a contract. If the employer realizes the error in the current year, they should correct the error through their payroll data files. So the information required from the employer for this request will be the start and the end date of the required contributions period, the pensionable earnings that the plan member should have paid and PSPP contributions for each calendar year, the pensionable earnings and contributions for the year that they did enter the PSPP. Our system has financial information for years prior to 1990 consolidated, so we may not be able to confirm the pensionable earnings and contributions. When we do the calculation, we look at the year in total, required and worked. So we need to be able to calculate the total contributions owing on the full amount of earnings they should have had within that year. Supporting documentation may be required. For example, this could be hiring records or extension letters. We also do need to know about any seasonal breaks, if applicable. The next type of purchase is the GMPP in error, and this is similar to a required contributions contract, but we do use the GMPP contributions to offset the cost. If the plan member does not complete the contract, future requests for the same service will be at full actuarial cost. Employer matching contributions are required. If it is in current year, the employer should correct the error through their payroll data files, but the employer should not fix past years because it won't give us accurate data, and it could negatively impact a 5 or 6 year average. This process is currently under review. These errors originate at the employer payroll level, and there will be a change coming with regards to how these errors are dealt with. It is extremely important to ensure that the data uploaded to Provident 10 is accurate to avoid these situations. The employer should also inform the plan member when this has occurred, because often the communication from Provident 10 is the plan member's first notification. So the information required from the employer is the start and end dates of the GMPP in error, the amount of contributions paid into the GMPP in error. We use the GMPP contributions paid in error to offset the cost of the purchase, pensionable earnings that the plan member should have paid in PSPP contributions on for each calendar year, confirmation of pensionable earnings and contributions in the year they entered the the PSPP, if applicable. So the GMPP was established April 1st, 1989. So if the service is old, like I said earlier, our records are consolidated, so we may require confirmation of pensionable earnings and contributions for the year they entered the PSPP. So an example of the GMPP in error would be if the plan member was extended past the 4th calendar month in a temporary full-time position and the employer did not switch them into the PSPP until the error was realized the next year. So next we have a PSPP in error, which is not considered a purchase. It's more of a refund, but it is important to note in this presentation because it sometimes comes attached to a purchase. For example, a plan member was overpaid prior to leave. In these cases, as this is a separate process from a purchase of service contract, we cannot offset the cost of the contract by the contribution amount. The PSPP in error must be dealt with prior to a purchase of service contract being sent out. If it is in current year, the employer should correct the error through their payroll data files. If it is not in current year, for example, the plan member paid PSPP contributions in error in 2020 or prior, a request to Provident 10 for action is required. It is important not to fix prior year issues in the current year. It won't give us accurate data, and it could negatively impact a 5 or 6 year average. The employer should also inform the plan member when this has occurred, because often communication from Provident 10 is the plan member's first notification. These errors originate at the employer payroll level, and there will be a change coming with regards to how these errors are dealt with. It is extremely important to ensure that the data uploaded to Provident 10 is accurate to avoid these situations. So the information that we need from the employer to process these are the start and end dates of the PSPP in error, the total earnings and contributions paid in error broken down by calendar year if applicable, confirmation that the funds should be remitted to GMPP if applicable. In cases where the plan member should have been enrolled in the GMPP, we take 5% of the confirmed GMPP salary reported in error and send the GMPP and employer match back to the GMPP and refund the excess amounts to the plan member and employer. In order to process this, the plan member does need to have a GMPP account opened, which would be the responsibility of the employer. If the employer confirms that the funds do not belong to GMPP, the contributions remitted to the PSPP in error will be refunded to the plan member and employer. And that's the end of the presentation.
Okay, well, thank you, Amanda. I'm just going to switch over here for a second. And So if anybody has any questions regarding that, I just have Amanda to turn on her video so that people can see her. If you have any questions regarding what she just presented, just pass it over to Natasha just to see if if individuals have sent in any questions to us that would be part of this particular presentation. And Natasha, have we received any questions?
Hi, Amanda. The first question, the only one I've received so far, is when an employee returns from unpaid sick leave on a return to work program and then goes back on unpaid sick leave, should their status be changed back to permanent full-time and put PSPP back into their withholdings effective the date they go on leave again?
So luckily we did have a bit of advance notice for this question. So I did go through it with Lisa this morning, and it does seem like that might be more of an internal process. But from our perspective, if the plan member is only on a return to work on medical ease back, and they are expected to return to a full-time position, then we would expect them to be set up for PSPP deductions when they do return to work.
And Amanda, I would assume that any of the payroll data files would reflect the dates that certain transactions like that or certain statuses changed, so that when the employer submits their payroll data file, then our system can update the periods in which that person was on various types of, like you said, ease back or return to full-time status.
Yep, that's correct.
Okay, that's the only question we've received so far.
Okay, so just you know, back to the group. If anybody wishes to ask a question, or if you think of a question that you might want to ask at the end, by all means, we'll certainly entertain the question.
Just received one more. Sorry, Perry.
Oh no, go ahead.
If an employee begins another unpaid leave and is in the process of purchasing a previous POS contract, how do this affect the initial arrangement? Can they resume deductions when they return to work?
I believe that our current process is that the plan member needs to ensure that deductions are reinstated within 45 days of their return to work. I can double check that information, and it will ensure that it is on the tip sheet that you guys receive. But as far as I know, that is still the current process.
Perfect, thank you. The next question, if a full-time employee returns to work on EaseBack, are they to be put into the GMPP until they return to full-time duties?
Yes. Yep, we do expect that they would be put into the GMPP for any time less than full-time service. And they would be able to buy the period of leave as well as the ease back at the same time, with the GMPP contributions offsetting the cost.
Thank you. The next one, if an employee returns to work from an unpaid sick leave, but returns to work on EaseBack part-time hours, we have had a practice of setting these employees up in GMPP, and then once returned to full-time, we would set them up in the PSPP. Is this the proper procedure?
Yes. Yep, absolutely. And then they have the 90 days from the date that they come back as active in the full-time PSPP plan to request both the ease back and the period of leave.
Perfect, thank you. The next one, if a full-time employee, I'm assuming, has less than 80 hours due to not enough leave, do they stay in the PSPP? This employer has a couple that go up and down a few shifts every second or third pay period.
Okay, so they don't maintain like a salaried full-time position during that time. Let me see.
Yes, that is correct. That's correct.
Okay. That's a good question. I might have to take that one away unless Lisa Blendon wants to jump in. Yeah, would you be able to flag that one for us to take a look at afterwards?
I will, thank you.
Perfect, thanks.
And I think that may be the end of the questions for now.
Okay, good.
Okay, That's great. And again, as I said earlier, if you think of a question regarding the purchase of service presentation that Amanda just did, and you want to ask it towards the end, or even when you'll get a survey evaluation form once we sign off today. That will be received immediately after we sign off. And there's a section of that particular survey where you can include a question that you may have that you may not have thought about during the time of the presentation. So we'll move on to the second presentation that Amanda is going to be doing for us. And again, this is a topic that employers, during our survey with them in December, suggested that they would like more information about. I just want to point out, and I think all employers are aware of this by now, that the forms, the purchase of service request form and the pension application form are now available they're digitized, they're available on our website under employers and they're under a section called forms and resources. So, you know, we certainly encourage, and I think every employer is now doing it, but if you're not, we'd want you to certainly start using the fillable forms. They're all drop-down menus, so they should reduce the amount of time it takes to complete certain forms, but to use them and to submit them, and obviously submit any forms like that through our KiteWorks account so that they're all protected and encrypted in the transmission. But we're also looking at doing additional forms in that manner and posting them on our website. And once they're done, we'll certainly let you know. So I'm going to switch it back now for Amanda to take control of the presentation again, and we'll hear from Amanda.
Perfect. So can anyone confirm that they can see the presentation all right? I'm just going to assume you can. So this is the presentation on pension applications. So the eligibility for an unreduced pension is that the plan member was credited with 30 years of pensionable service on or before December 31st, 2019, and has attained age 55. They have been credited with 30 years of pensionable service and have attained age 58. They were credited with 5 years of pensionable service and attained age 60 on or before December 31st, 2019. They have been credited with 10 years of pensionable service and have attained age 60. They have been credited with 5 years pensionable service and have attained age 65. As well, plan members must be placed on pension by the end of the year in which the plan member turns 71 in accordance with the Income Tax Act. The plan member does not need to terminate in the month of their birthday, but they do need to be placed on pension effective December 1st of the year at the latest. The plan member does not need to terminate from their employment, but they are no longer eligible to pay pension premiums or accrue service beyond November of their 71st year. In order to apply for a medical disability pension, the plan member must be vested with 5 years of pensionable service. Once approved, they are eligible for an immediate unreduced pension. So our current process is that the employer submits the pension application with necessary supporting documents according to the employer payroll schedule. If the pension application is incomplete and there is missing required supporting documentation, you will be notified by one of our pension administrators. We do not open the pension application case until all required information has been received. The pension analyst will process the pension application as per our internal payroll cutoff. If the completed pension application is received after the employer payroll schedule cutoff, for the first pay period after termination, one of our pension administrators will contact the employer to ensure that they are aware of the delay in processing. The pension application will also not be processed if there are any open cases, for example, a purchase of service contract, a transfer, or an outstanding balance. We are currently only placing new retirees on pension on the 15th of the month payrolls. Only changes are processed for the end of the month payrolls. Employers may be contacted for additional information during the pension application process. Once the pension application is approved by the supervisor, the plan member is sent a letter of their pension entitlement and a copy of their pension calculation. The employer is then notified of any over or under contributions, if applicable, at that point. So the information required on the pension application is the employee's personal information, the date of termination, Pensions are effective the first of the month after termination. We also need to know whether or not it's a medical disability pension. These pensions are different. You only need to be a vested plan member to apply. Once approved, the pension could be effective the day after we receive the completed medical disability application. There is more information specifically on medical disability pensions later in the presentation. We also need to know total current year pensionable earnings and contributions. Because pension applications are required to be submitted weeks in advance of the first pension pay period for the plan member, it is necessary for the employer to project what the final earnings and contributions will be so we can confirm final pensionable income. For December terminations, the employer should specify what earnings and contributions will be paid in termination year and what earnings and contributions will be paid in the next calendar year, as the contribution rates will be different. If there is an outstanding purchase of service or transfer case, the pension application will not be processed until the case is closed. If the plan member goes ahead with the transfer or purchase, we require payment in full from the plan member and employer, if required, prior to closing the case. We also require the retro allocations because we need to make sure that all earnings are allocated to the time frame that they should have been paid in order to properly calculate the 5 or 6 year average. Retro allocations can also impact the contribution audit. It's important to submit the information with the pension application because it could cause a delay in processing the application. And again, please make sure that the employer electronic signature is included. So the supporting documents required are the calculation of pension entitlement, including the service breakdown, filled out to the best of your abilities based on the information that you have. There are cases where the plan member was with a different employer or had a purchase or transfer contract and they did not give you a copy. So we do understand the limitations. We still need to verify what is sent in against what we have in our files. If the plan member does not have a birth certificate, a copy of a valid passport or valid driver's license are acceptable. We cannot accept handwritten direct deposit information except in the case of credit unions. So for the service breakdown, complete based on the information that you have, include all authorized leave, seasonal layoffs, purchases, transfers. If necessary, you can always request a service audit prior to submitting the pension application. And please include if there has been a marriage breakdown to your knowledge. So the pension estimate calculation. The date of retirement is the same as the termination date, not the first day that the pension is effective. If the date of retirement is incorrect, it will pick up the wrong 3-year average YMPE used to determine the bridge benefit. In Section 1, if the sections for employer contributions reduced and member paid difference are left blank, it will default to give the plan member the full 2% accrual, which could cause the estimate to be too high. If a GMPP transfer, actuarial purchase, or reciprocal transfer request was received prior to January 1st, 2015, the months of service should be added to the index service. If the request was received in our office January 1st, 2015 onwards, it would be considered non-index service. If the plan member had time-to-time preferred cost, GMPP and error, or required contributions contract, the service gets allocated to when the service was worked. For example, a plan member has a required contributions contract for April to December 1990 that was completed in 2020, it would be considered index service. So the best average salary. If the plan member does not have the required 60 or 72 months of service, please include what they do have and change the input for is member seasonal from no to yes. This will annualize the earnings that they do have. We look at 12-month segments from the date of termination to determine the best 6-year average. For seasonal plan members, the averaging period in the 5-year average is from January 1st, 2010 to December 31st, 2014. For the 6-year average, it's the 6-year period immediately prior to termination. You will also have to change the input for is member seasonal to yes. The calculation will also be seasonal if the plan member was seasonal for part of the last 6 years. For example, the plan member works in a seasonal position up until June 2017 and then retires in December 2020. This would be a seasonal calculation. For time-to-time preferred cost purchases, we do use the deemed earnings in the calculation of pension entitlement. We only expect employers to fill out their estimates to the best of their ability. For actuarial purchases and transferred service, we apply an internal discounting process to use the service in the 5 or 6 year average, and there is no expectation for employers to do the same. So for medical disability pensions, the earliest date that it would be effective is the first day after the date of termination, not the first day of the following month as other unreduced pension applications. The earliest date of termination can be retroactive to the date that the completed medical disability pension application was received by Manulife. Now, this could be impacted if there's any paid sick leave entitlement because all paid sick leave must be exhausted prior to termination. If the plan member is on leave, they do have the option to purchase up to the end of the month that the medical pension approval was granted. The pension would be effective the first of the following month. If the plan member wishes to purchase a portion of the leave without pay, the effective date of the pension would be the first day after the purchase of service request was received by Provident10. If the purchase of service request is received after the month of final approval, the effective date of pension would be the first of the month the purchase of service was received. As part of the pension application process, we do a contribution audit on all pensionable time. If there's an over or under contribution, it is the most recent employer that receives the refund or needs to cover the deficit. We have a $50 threshold for over or under contributions. For under contributions, we will recover the plan member's portion as a deduction from their pension payments. We will send a letter to the employer to let them know that they need to send in funds to cover the deficit. For over contributions, we will issue refunds to the plan member and employer as part of the pension application process. We will send a letter to the employer to let them know that the funds are going to be sent to them. And that concludes the presentation.
Well, thank you, Amanda. And again, just bear with me one second. Okay, so does anyone have any questions for Amanda regarding the pension application process? Again, as I said earlier, the pension application is online on our website. It's a fillable form. We're trying to, as I said, reduce the amount of work that the employers have to do to complete some of these forms on behalf of their employees. So we certainly encourage you to be using them. So Natasha, do we have anybody who've asked us a question regarding the pension application process?
We actually have one other question, sorry, that came in just after you started your presentation related to the sick leave. So I'll just ask that one first if it's okay. If an employee was in a temporary full-time position and was in the PSPP prior to the period of leave and then returned and was put back into PSPP from a layoff, can they purchase that period of layoff?
So they can't purchase layoffs, but sorry, so they were in a pensionable position, then they went on sick leave and got laid off, and then they came back to the PSPP. Is that what I'm understanding?
That's what I understand as well, yes.
Okay, yep. So they could, like I have seen like the rare case when somebody went on leave, say in the 90s, and then they went into the GMPP for 20 years and they came back in and you have 90 days from the date that you were active in the PSPP to request the service. So it could be, you know, the following year, or like I said, I've seen it be a lot older service. It's just, it has to be 90 days from when they become active again.
Perfect, thank you. The next question was, what will happen with past pension calculations once QP gets their general increase this year? Do all the retroactive earnings have to be sent on these past calculations? Sorry.
So sorry, can you read that again?
What will happen? Go ahead.
Sorry, so it's about the general increase that they're getting? Is it about the retro for it?
That's correct.
I might have to take that away. I know that we are trying to automate maybe like the retro.
My understanding, Amanda, is that the retro, anybody who receives retro, whether they're active or retired, the retro calculation and benefits would have to be submitted to us. Anybody who's currently in receipt of their pension, who that retroactivity would affect, then we would have to recalculate their pension benefits based on their new earnings. Obviously, if it's if they affect their 6-year average. And for any active member, obviously, the retroactivity will be reported, and then it would be put in our system based on the year in which the actual retroactivity is applicable to. So, and again, all employers would have a form that we sent out to them, I think it was last fall, where you report your retroactivity of all plan members or all employees. So we've eliminated the what I would call the single form for every employer. Every employee, you would have to fill out a form. Now you simply had to fill out a spreadsheet for all your employees that's affected by the retroactivity and report it that way. It gets uploaded to our system directly from the spreadsheet.
Perfect, thank you. So somebody asked a question about medical disability pension. The employee needs 5 years of vested service. Is that correct? And can they purchase the leave prior to applying for medical pension?
So that's correct. They need 5 years of service in order to apply. We have had cases where a plan member, say they had 4 years of leave and 4 years of service and they were off on leave for a year. We have had cases where they have purchased enough to have the 5 year service in order to apply.
Perfect.
In general, we don't, if someone's on leave, we need a defined end period, like a return to work or a termination date before we would purchase any requests in the middle of the leave. But I do think we make the exception for medical disability pensions in order to vest them to apply.
That's correct, Amanda.
Perfect. The last question I received is, if an employee is eligible to retire but wanted to know their options, is it right to select section 1 on the termination form because the employee wishes to know their options?
And sorry, so at the beginning of that, you said that they were already eligible?
Yes.
Pension. So if you're eligible for an unreduced pension, you have to take the pension. They can terminate prior to being eligible, and that's when they would get their options. I think though, Perry, don't we have separate forms for termination versus retirement now?
Yeah, we do. We have Amanda is correct. Somebody who's terminating their employment, they can, if they wish to receive their options, they have to terminate before they qualify for one of the 3 unreduced pensions. So that's age 65 with 5 years, age 60 with 10 years, or age 58 with 30 years. So you have to be, the plan member would have a termination date prior to qualifying for one of those pensions. If they are eligible, or if they meet one of those 3 conditions, then the employer would complete a pension application, not a termination form. So if a person qualifies for the unreduced pension, there's no option but the pension. So if I know, some people or some employees like to evaluate whether or not they take their pension or their commuted value. Some of the things that they need to understand, and something that I go through when I do the pension presentations, is that we will not provide estimates of terminating benefits until we actually receive the termination form from the employer, as well as the payroll data fee from the employer indicating that they have terminated their employment and the date of termination. Because we need to know what the actuarial assumptions are on the plan in order to calculate the CV, and we will not estimate what those actuarial assumptions are going to be in advance, because they're inaccurate, and we have been advised by legal counsel, by our actuary, and by the board of directors not to provide estimates on those values. So when you sit down with an employee and they want to talk about their CV, the thing they got to remember is that in order to receive a CV, number one, they got to resign or terminate their employment, and before they're eligible to receive one of the unreduced pensions. But as Amanda pointed out, there are 2 separate forms. They're both available on our website to submit on behalf of an employee, whether it's a termination form or whether it's an actual pension application. And there's two totally separate processes, by the way, when it comes to the processing of a termination form versus a pension application. With a termination form, we have a 180-day service standard from the date of termination. So the employer would have 30 days after the date of termination, for example, to submit the termination form as well as their payroll data feed. And then from that point onward, we take 30 days to process the request. It's sent out the TEEF, or the termination of employment election form, it's called. It's sent out to the plan member, where they would have to elect what option they wish to choose, of which the options would be obviously a CV. And they have 60 days to sign and return that. And once it's returned to us, we have 60 days to process. So it's a 180-day process. Whereas a pension application, as the employers are aware, you have the employer cutoff schedule that was sent to you back last November. And each of the deadlines are governed by 7 weeks prior to the first pay date that member wishes to receive their pension after they terminate their employment, if they're eligible, obviously, for their reduced pension. So, for example, somebody who wants to retire, say, at the end of June this year, and receive their unreduced pension benefit on July 15th, I think the cutoff deadline is like May 27th. So that particular schedule is totally different than the termination form when we're processing. So, you know, it's important for plan members who are terminating their employment not to expect to receive the benefits in the same timelines as those who are retiring, because of the way the process is established, that we need to know all the information before we process the option. The thing that people need to remember is that we have a defined benefit pension plan. We're in the pension business as a pension administration, and therefore having a defined pension plan, it's easier to calculate what the defined pensions are going to be rather than try to predict what a commuted value of a pension benefit would be when you don't know the interest rates in advance. So hence the reason why we wait until we know what the interest rates are applicable to the plan on the date of termination. Long-winded answer to a question, but I want to clarify that for people.
Thank you both for the information. Just wanted to go back for 1 second regarding the question about the layoff, just to let you both know that you clarified, and the employer, you've answered their question, so they're happy with the response. Thank you. And that is it for the questions that we have received.
And again, if you think of a question between now and the end of this presentation or this session, by all means, you know, we'll give you an opportunity at the end to ask any other outstanding questions you may have. So thank you, Amanda, so much for the 2 presentations. Fantastic information, very detailed, very technical, and hence the reason why we bring in our, what I call our experts in the area. So Amanda is certainly one of our experts on staff dealing with pension applications as well as purchase of service contracts. And oftentimes, you know, if one of our experts, such as Amanda, is unfamiliar with a question or not able to give you an answer right away, then obviously there is a discussion, and that discussion is usually held with the next person that's up for the presentation, which is Lisa Blunden. Lisa is our plan technical expert when it comes to a lot of the interpretations of the terms and conditions of the plan and past practice. You know, she works very closely with our legal counsel, very closely with our actuary, and any of the other consultants that we have that help us administer the plan. So we've asked Lisa to do an overview today of pension adjustment. As you know, we have been providing employers with pension adjustment calculation since we became the plan administrator. It's a process that it's solely the responsibility of the employer. However, at this point in time, we have been providing pension adjustments to employers on the caveat that, you know, it's just there for your reference. It's not to be used. You're still responsible, solely responsible for whatever you place on that T4 slip. When you send in a T4 for a plan member or an employee, you're still ultimately responsible for whatever that pension adjustment number is that you sent in. So I won't steal any more of Lisa's thunder. I'll change it over so that Lisa now has control of the presentation. So Lisa. There you go.
See my screen, perfect. Okay, so this presentation is intended to demonstrate the importance of the pension administration system accurately reflecting the pension adjustments reported to CRA by the employer. Things we're going to discuss are the importance of accurate pension adjustments recorded on our system, as I said, how the PAs relate to service transfers from the public service pension plan to another registered pension plan, the relationship between PAs and the calculation of past service pension adjustments, or PSPAs, for a past service event, and how PAs affect the calculation of pension adjustment reversals. So the PA values reported on the pension administration system should accurately reflect the PAs reported to CRA on a member's T4 for each year, and they're required to ensure that Provident10 is in compliance with the Canada Revenue Agency regulations. Questions on this process should be directed to our systems IT section. Provident10 often must utilize external advisors for some ITA-related questions, and the employer may need to do the same if they are unclear on when or how to calculate a PA. Okay, so PA transfer values. When a former member transfers their benefit from the public service pension plan to another registered pension plan, Provident10 is required to report the history of the pension credits or the pension adjustments to the importing plan. The reported PA amounts are used by the importing plan to determine whether a past service pension adjustment is required to credit the service under that plan. So the yearly PA amounts as reported on the member's T4s by the employer are the figures required to be provided to the importing plan for all the years being transferred. Confirmation of PA figures currently recorded on the pension administration system may be required from the employer to complete the necessary form for transfer. So we may need to request confirmation of the PAs reported on our system to ensure that they agree with the ones reported to CRA. The reason these figures are important is if the PA transfer value of the importing plan is greater than the sum of the PA amounts reported by the PSPP, the importing plan must request PSPA approval from CRA before the service can be credited or transferred. If the importing plan's PA transfer value is less than the sum of the PAs reported to CRA under the PSPP, the importing plan would notify us of a lower PA transfer value, and we would then be required to prepare and submit to CRA a pension adjustment reversal for the difference to restore some of the members' Rrsp room. And I will discuss that a little bit further in a later slide. Provident10 having accurate PA amounts is vital to ensure the PA amounts reported to the importing plan are correct, and any required CRA reporting as a result of these values is accurate. If we don't have correct PA amounts, we cannot provide accurate PAs to the importing plan, and this could impact the employee's ability to transfer their service. Past service pension adjustments reduce an individual's Rrsp personal limit. PSPA calculations are required to be performed where a member has a past service event which increases their benefit under the plan. A past service event will trigger a calculation that could include a purchase of service or transfer of service into the public service pension plan. A PA reported for any year for which service is being purchased or transferred will impact the PSPA calculation. So the PSPA calculation considers the value of the additional benefit as well as any PAs already reported for a member in a given year to be purchased or transferred. So as an example, if a public service pension plan member terminated employment in 2015, they left their money in the plan and they returned to the PSPP in 2019, then elected to transfer their service that they worked with another registered plan during that period into the PSPP, the member would have a PA calculation already reported to CRA for 2015 because they left their money in the PSPP, and they would also have a PA reported for 2019, the year that they returned to the PSPP. So the PA value reported to CRA for 2015 and 2019 under the PSPP would be taken into consideration for the calculation of a possible PSPA for the transferred service. If the PSPA calculation is positive, then approval is required from CRA before the service may be credited. Some factors used in the calculation to determine if a PSPA approval is required would be PAs provided by the exporting plan for the period of service to be transferred, any prior PSPAs reported for the member, PAs calculated under the PSPP for the same period of time, any PAs reported to CRA under PSPP for overlapping years, and any qualifying transfers used to pay for the transfer. So funds available to transfer from the exporting plan, and if applicable, any Rrsp transfers that the member uses to credit additional service that the transferred funds didn't credit. Pension adjustment reversals is an amount that's added to an individual's Rrsp personal limit when they stop being a member of the pension plan. PARs came into effect in 1997, and they are generated upon termination of employment if a member is not vested and receives only their refund of their own contributions, or if the commuted value is transferred out of the plan and the post-1989 portion of the CD is less than the sum of an individual's pension benefits. Calculation of PARs for individuals who terminate and take their benefit out of the plan are calculated by our pension administration system provider quarterly, and they're sent to Provident10's finance accounting manager for submission to CRA. The PA transfer amount required by an exporting pension plan administrator is also used to determine if a PAR is reportable when the member benefits are transferred between defined benefit registered pension plans. So if an individual's pension benefits are transferred and the PA transfer amount, if the PA transfer amount is higher, then a PAR is required to be generated. And then we would have to report the PAR to CRA to credit back some of their service. And that is it for my presentation.
Okay, thank you, Lisa. And I think people are very much aware that this is a very technical piece of the processing that Provident10 as a plan administrator is required to do with respect to the reporting of service credits or recognition of service in our pension plan when there's transactions in our plan and other plans, as well as for the plan members' own Rrsp limits. It's a vital process, hence the reason why it's so critical that the pension adjustments reported by employers to CRA are accurate, and thus reported to us are accurate. And that's why, in order for us to be in compliance with and to ensure the accuracy and accountability to our plan members, that's why we're starting to change the pension adjustment reporting process. As you were made aware back in December, because of this idea of being in compliance with CRA, we will be reaching out to employers in the very near future with a template for you to indicate what the PAs were for each of the employees who are members of the public service pension plan, what was reported to CRA at the end of 2020 on their T4 slip, because in many cases the PA that we have in our system or calculated in our system based on the data that was sent to us by the employer may have changed. So we want to ensure the accuracy of any of the transactions that we're doing on behalf of the plan member, especially to be compliant with CRA, and therefore would be certainly looking to our employers to provide us with the PA that was reported on the T4 slip for 2020. So as I said, that will come out shortly in a memo to you. We gave you sort of a heads up back in December of having to do this now. And we wanted to wait, obviously, until the T4 slips were forwarded to the employees, and any corrections with respect to addresses and whatnot would have certainly come back to you by now. Recently, we sent you a request to send in the mailing addresses of the plan members, the most accurate mailing address you have. That certainly helps us when we go to distribute the benefit statement. And, you know, as you're aware, from year to year, the employee's mailing address can change. However, oftentimes we are not notified of that change because the employer is probably not even notified of that change until a T4 slip is sent out and the plan member realizes that the address on the T4 slip is inaccurate. So we're waiting on, I think it's sometime in May. I think May 12th rings a bell as to when the address template should be sent back to us. We've received quite a number already, which is great. So that we can load them up into our system and cross-reference them with the mailing addresses that we had last year. So there's a huge internal process that we go through both for PAs and addresses and whatnot. But before I go any further, I'll open it up to to Natasha. And if there's any questions regarding the pension adjustment process that Lisa just explained.
Perfect. Thank you, Perry. The first question was, if a person is on leave, do you include this in calculating the pension adjustment?
No, you wouldn't include deemed earnings in a pension adjustment calculation. But again, this is something that if you have any direct questions on how to calculate a PA, there are resources. Revenue Canada has a lot of information on their website about how to calculate and what should be used in the calculation of PAs, but deemed earnings would not be used in calculating a PA for a plan member.
Hello, Natasha?
Yeah, just to follow up to that first part, the employer asked if a person was part PSPP and part GMPP in the year, do you need the full amount of the PA or just the portion related to the PSPP?
We would only require the portion related to the PSPP.
Perfect, thank you.
And that's similar to, okay, just let me add something further to that. I know earlier we talked about the retroactivity as well. That's something that when employers report retroactive earnings, that they only report the retroactive earnings on the public service pension plan salary, because there may be situations where a plan member may have been a member of the PSPP during the period of retroactivity. It should not be reported to us what portion of their salary was GMPP. We're only interested in what portion of the salary was actually PSPP contributions to the plan for the retroactivity. So I just want to add that as well.
Thank you. I received a general question that I'm sure one of you could answer. If an employee is retiring with a reduced pension, for example, their 58 and 20 years service, can the employer send in a termination form in advance of the date of termination, or should they wait until the employee has reached their termination date?
Well, if they send it in advance, because they don't qualify with 58 years, 20 years service, they don't qualify for an immediate unreduced pension. We will send them out their options. But the thing about it, even if we receive it in advance, we will not process it in advance because we have to wait until we receive the termination date through the payroll data file. To confirm that that person has actually terminated their employment and what the earnings have been to the date of termination. So sending it in 30 days in advance, you can do it, but it doesn't advantage the plan member on receiving what their terminating options are going to be until after we have all the data that we need to calculate their things like their commuted value. They may, if somebody 58 with 20 years of service, they would also qualify for the actuarially reduced pension, which again requires us to calculate the benefit based on the actuarial assumptions of the plan. So we have to wait until we have those actuarial assumptions based on the date of termination. So sending it in advance, no issue. It's just that it won't be processed until Provident 10 has all the values that it needs to make the accurate calculations of all their terminating options.
Thank you. There's no further questions right now.
Perfect. Thank you.
Okay. Well, thank you, Lisa, so much. And again, as I said, the technical piece of pension adjustments, I'm certain that I would have been tongue-tied with some of the PAs, PSPAs, PRs, and everything that Lisa just talked about. So having somebody with Lisa's experience go through that very technical description is so important. And again, if you as an employer have any questions regarding any of the information you've received here this morning, by all means, feel free to drop an email to Lisa or to Amanda at our office, and I'm sure they would follow up with you. That will lead me into contacting Provident 10. Obviously, as you're aware, with the ongoing pandemic, our office still remains closed to the public. However, we are located, if the day ever came when you can come back into the office and meet face to face. Anybody familiar with St. John's? We're off Majors Path on International Place. And it's the Grant Thornton building. We're on the second floor of the Grant Thornton building, so Suite 200. But our office, the majority of people are currently working remotely. So our office is functioning at 100% capacity remotely. So you can call those numbers on your screen. If there's any inquiries or questions that a plan member would have regarding their pension, by all means, direct them to the email address. We encourage people to email us, because at least there's a document or a transaction that you can follow. Where questions have been asked or inquiries have been made and answers have been provided. So it's not, well, somebody called in and heard this from a staff member. Oftentimes when we get inquiries, follow-up inquiries, and they say, well, I was talking to somebody at Provident 10, or I was talking to my employer about it. Having that written correspondence is so critical and so important. And by the way, every call that comes into our office by a plan member or an employer, it's recorded. And we have a database in our Ben Plus system where any information that's been provided or any inquiry that's been made by a plan member is recorded. So, somebody calling us 12 months from now and saying, I called Provident 10 sometime last year regarding an issue, we can tell you the exact date that they called and who they spoke to. So important that, we have that information available. Also, anything to do with our pension plan obviously is critical to our employers and our plan members. And on our website, we do have a pension plan booklet, and it's found under the resource section of our website. So if you go onto our website under resources, and there's a section called archived resources, you will see the plan booklet and other things. You'll also see the schedule. For example, the employer cutoff schedule is there for your viewing. And there's a lot of other documents there as well. Just to conclude, we do have one polling question that we want to pose to you at this point in time. A polling question is simply asking for your input on this particular session itself. You will get a survey, as I said, as soon as we sign off, with more questions and more detailed questions looking for your input. And again, we want to encourage you to complete that survey and send it in to us, because we want to know what information you need or what you'd like to have regarding the pension plan or processes and whatever that can better help you with your role and responsibility with your employer, with your employees and the plan member. So you will receive the survey. I'm going to get Amanda, I always say Amanda, I'm going to get Natasha to post up the polling question. And all you need to do is simply take your cursor or your mouse, scroll to the answer that best satisfies or best suits your response to the question, and I'll ask Natasha to come back after just to give a response to it. So Natasha, you can post up the question for the group to answer. While you're doing that, I just want to again elaborate that we do have or will have a tip sheet on this particular session available to you. So now once we conclude the session, we'll finalize the information that's in that tip sheet, and we'll post it on our employer section under the Ask and Answered series, as well as notify you when it's up there. So, if you want an overview or a summary of what we've discussed today, that will be available to you very shortly after the session concludes. So, Natasha.
Hi, Perry. 88% answered yes, and 12% answered the session confirmed what I already knew.
Well, that's fantastic, and I'm certainly glad that that everybody learned, or the majority of people learned something new today, or just confirm what you already knew about the pension plan. And it's oftentimes important to receive those assurances as well. I just want to let you know that our next Ask and Answer series, we're planning to have these series probably every 8-9 weeks to give you an opportunity if something arises between each of the sessions to notify us of the issue or any question you might have or any process that you might want to have elaboration done on. We would certainly entertain anything. We did on the survey that we sent out in December receive quite a feedback from our employers, and we have another number of topics that employers have asked us to comment on during these sessions. So we will put out a call for questions or presentation topics a couple of weeks in advance of our next session. So mark your calendars, June 2nd, it's a Wednesday, June 2nd, same time, 10 to 11 or 10 to 11:30. We'll be doing it. We'll probably go for an hour, 10 to 11. Because the introductory section of this particular presentation we won't need to do. But if you feel that 10 to 11:30 is a great time, let us know. If you feel that an hour is plenty, we'd also like to know that as well. So without further ado, if you have any questions, we'll stay on the line for a few extra minutes and answer any questions that you might have. So just leave it to Natasha to, you can come online, feel free to come online, unmute your microphone and ask your question or type your question into your control panel. So if there's, I'll turn it back to Natasha to see if there's any further questions.
I have a question that I think may be for Lisa. It appears that the pension adjustment received from Provident10 do include deemed earnings, but should us as employers not use them for our own PAs?
No. So that is correct. The current calculation on the pension administration system does take into account deemed earnings, but it should not, which is why we tell the employers that these are, for your reference, but not for you to use. It's up to you to actually calculate the proper PAs for your employees, and they should not include deemed earnings. And that's also why we would likely have to go back to an employer to confirm a PA reported to CRA for a member who's looking to transfer their service out, because we would need the accurate PA reported to CRA, not the one that was calculated on our pension administration system using the deemed earnings.
Perfect, thank you. I had a general question. What about if an employee submits money to purchase service? Who's receiving these funds, and is anybody checking mail at our office currently?
Yes, currently right now at our office, our mail is being checked. I think it's 2, if not 3 times a week. So any contributions that are coming in via check or whatever is being recorded, and the process is being followed as though the office was open to the public. So you can be rest assured that that information or those documents are being received. You can even come to our office and drop off that information. There's some drop-off boxes outside the elevator. As soon as you get off the elevator on the 2nd floor at our office, they're drop boxes that are very secure, and these drop boxes are checked on a daily basis as well. So people should be should feel comfortable in knowing that any information, any funds that are being sent into us are being processed as though our office was open full time at this point in time. So I just want to reassure people that that's being looked after.
Okay, another question I just received. If an employee purchases leave, do employers include this in a PA calculation?
So they would include it in the current year if the purchase was paid for, if it was a time-to-time purchase, so it was purchased within the 90 days, and it was purchased within the taxation year that you are reporting on. So if somebody purchased service in 2020 and it was done on a preferred cost, you would use that salary along with the regular earnings for calculating the PA. And again, there's, CRA basically is your best place to go to get answers to specifically how to calculate the PAs. It's not something really that, that we would be able to give a lot of information on.
Thank you, Lisa. The last question I have for now is, if an employee retires, for example, on June 15th, and their first pay would be July 15th, would they receive any retro?
So they would not receive retro because the July 15th pay period would cover July 1st to 15th. The pension is effective the first of the month after termination.
Yeah, so, and this is a common question that's asked during the retirement sessions. People say, well, what if I retire the 2nd of June? When is my first pension check going to be received? Well, your pension is not applicable until the 1st of July, and you're going to receive a pension check on the 15th of July, provided that we have all the documentations in place and the calculations done to put you on pension payroll by the 15th of July. Likewise, somebody who retires at the end of June, the last day of June, with the appropriate documentation being provided, their pension is still applicable on the first day of July, the next day. So there's really a very short, that's the shortest delay there would be between salary and pension benefit, is if a person retired on the last day of the month. Retiring any other day during the month, your pension will still only be applicable on the first day of the following month.
Except in cases of medical disability pensions, which are effective the day after termination. So if they had it affected, their termination date was June 15th, it would be effective June 16th.
Correct.
Okay, so somebody just wants a little more clarification. So say somebody is turning 60 on October the 4th, 2021. The pension will start on November 1st and be paid on November 15th. Is that correct?
Yes.
Provided that all documentation provided the pension application and the supporting documentation is received in our office prior to or as of the date that's on the employer cutoff period. If it's received late, then that person's pay will be put on the 15th of December, retroactive to the 1st of November. So they would still receive their benefit, but it would be a month delayed.
Great, thank you. I have no further questions.
Okay, well, I'll be signing off now. I want to again thank everybody so much for joining us this morning for this session. I hope you found it very informative. All the time I listen to Amanda and Lisa with processes and presentations like this, I always learn something, and I've been involved in the pension industry for going on 25 years now. So I definitely would not consider myself to be the expert. I turn to the people like Lisa and Amanda to be the experts in our industry, and they have expertise in various fields of the pension industry. So that's why, as I started from the outset to say, we don't expect or anticipate employers to become the pension experts. We just want you to know where you can turn and who you should contact if you have any questions. And, from my experience in the last 4 years being the Director of Member Services and that conduit between or liaison between employers and Provident10, I can assure you that I've certainly encouraged people to contact us. And, there's not a day, I don't think, that I've been in this position that I haven't had a contact from an employer on an issue or a question. And I'm only too glad to help in any way I can to assist you in doing what's needed so that we can ensure that our plan members get the best service possible towards their pension benefit. So again, we certainly encourage you to continue on with that collaboration and that consultation. And we hope that this session today will lead to many more of an engagement type process with our employers. So without anything further, again, I want to thank everyone for joining us, and we hope to see you all on June 2nd for our next Ask and Answered session. Thank you so much. Enjoy the rest of your day and stay safe out there.
All right, thanks.